this may be the week that Twitter fields bids from Suitors. Salesforce.com, Disney, even Google may be among those throwing their hat in the ring for the 10-year-old social media site. That's according to the Wall Street Journal. So joining us now to break this down is Mike Snyder, technology reporter at USA Today. Mike, thanks for joining us today.
You bet.
So Salesforce.com lost out to Microsoft in its quest to buy LinkedIn earlier this year. Now we've got these reports saying Salesforce chief executive Mark Benioff is after Twitter. What will Twitter bring to Salesforce.com?
Well, it brings a whole bunch of data and behaviors from the 300+ million monthly active users that Twitter has. I mean, you and I, we all use Twitter throughout the day, talking about what we're doing, what we are interested in, and putting up comments. And there's a lot of data there that Salesforce could use. It also could be a defensive move. As you said, they lost out to LinkedIn.com, that acquisition. And, you know, it's almost like an offense and a defensive strategy at the same time.
Yeah, and certainly Salesforce is already in the news with Dreamforce happening this week and everything else. What are your thoughts on some of the other potential suitors of Twitter? We've got Alphabet's Google, media giant Disney are a few of the names that have surfaced here. What would this mean for them?
Well, Google is another company that could use Twitter's data. I mean, it also is in a battle with Facebook for all types of digital advertising dollars. And Twitter is an automatic, almost a broadcast network that Google could connect with to kind of have some synergies with YouTube already. You know, Twitter has been expanding its live content. It's doing NFL games regularly this season, and it has deals with the NHL and Major League Baseball, which will kick in next year. So this would just be another way for Google to connect with people. Also, it would use that data too and find ways to find other synergies on social networks. I mean, obviously Google Plus really didn't pan out the way it would like, and that's a way that Twitter could help that. Also on Disney, I mean, Disney already is in our lives in so many different ways, broadcast-wise, but they're not always in our pocket. And if you have a smartphone, you have Twitter, you have its live broadcasting, and you have all kinds of ways that Disney could use Twitter, not only through marketing, but through sending content to people. So there's a lot of reasons to want Twitter. It's a great brand. It's just under struggled times right now because it's seeing its revenue, you know, the growth is dropping and user growth may be topping out.
And in light of those many opportunities to actually, you know, things that Twitter would bring to the table, we've also got the reports saying that Twitter could cost more than $20 billion to acquire. While it's not necessarily that much for a Disney or a Google, could Salesforce specifically even afford to buy this, and would it be a smart move if it did?
Well, I think they're smart enough to know whether it is or not, and obviously Mark Benioff is saying that he thinks it's an unpolished jewel, I think is the quote that's being bandied around. There are things about Twitter that make it that are going to make it more expensive than its market cap, which is about $16.5 billion. And that's because you have these big names, you know, trying to get the company. That's going to drive the price up. Salesforce is going to have to look at what synergies it could use with Twitter and decide if that's worth paying that price. You know, it sounds like this is going to happen. However, Twitter doesn't have to sell. You know, it's trying to make moves on its own. CEO Jack Dorsey's only been there for about a year back at the company, and their board has got a fairly new turnover. So they may say, you know, the bid isn't good enough, we think we can handle this on our own. But there's a lot of smoke there, so you got to think something's happening.
Yeah, and one of the biggest issues, and it's certainly why we've seen the stock really take a nosedive in recent quarters, is the stagnant user growth. That's considered a big problem. If the company decides not to sell and to remain independent, do you think that it actually has a chance to excite users and thus investors? Can it actually, you know, reinvigorate that growth?
Well, I think that's one of the things they're trying to do with this new live content stuff. I mean, Periscope hasn't really worked, you know, as a connectivity, a way to connect people socially. So what it's trying to do is make you come to Twitter for content also, and that might drive, you know, new user behaviors. You know, if you can get more baseball fans to get on Twitter and use that regularly, they might use it as a connectivity device. It's hard to say about Twitter. You know, it only does so many things, and it can't really get me to pay anything. I mean, that's part of the problem. They don't have enough revenue coming in. So, you know, Twitter is definitely important. It's a very good brand. But can they reinvigorate from within? That remains to be seen.
It certainly does. Well, Mike Snyder, thanks for breaking all of this down for us. Thank you for watching. I'm Morgan Brennan. Have a great day.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.